Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 8th of December 2016, presented by myself, Phil Carr. So during the course of today's session, we will be covering live market analysis. We will be creating a short list of trading opportunities, a trading plan as we go into next week, particularly for the FOMC statement, an overview of the commodity markets, and also we will be covering top trades of the week as well. So before we get started, let me introduce you to the Gold and Silver Club. Now, the Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.com. Today, a lot of our focus is going to be on next week's FOMC statement. I thought with a week to go now, just under a week, this is going to be really one of the major trading opportunities between now and the end of the year now. So we'll put a lot of focus into this. If there are any questions, do feel free to put those into the chat as well. So we just break it down for you why the December FOMC meeting is the biggest trading opportunity of December. Fed officials will be holding their final meeting of the year on December the 13th to the 14th. So that will be next Tuesday and Wednesday. Uncertainties surrounding what economic policies President-elect Donald Trump would pursue prior to the US election made the chances of a Federal Reserve interest hike less likely. However, since President-elect Donald Trump's victory in November, market sentiment has rapidly shifted and traders are now expecting an interest rate hike in December, and there is no real fundamental reason for the Fed to disappoint now. While no one knows the outcome of next week's meeting or how the markets will respond, uncertainty does tend to make volatility in the markets, and with that equals, of course, opportunity, and the key is knowing what to do to take advantage of that. So as we go into next week, we can see the odds of a Fed rate hike have now increased to the highest levels this year. So almost at 100% now. So we could look at this as almost a sure thing going into next week's FOMC statement that it's very likely to take place. And you want to position yourself correctly in order to take advantage of that. So what we'll do, guys, we'll go and break it down for you into a trade watch list as we go into next week's FOMC statement. What we're looking at ahead of that, of course, this often impacts gold, silver, the US dollar. So we'll break it down for you. And first of all, I will start off with the metals, which certainly over the course of this week, we'll go over, first of all, to silver, which we covered during last week's session. And we'll talk about the overall price structure at the moment, what we see developing as we head into next week. Now, we're on the weekly chart right now. As noted on last week's session, we talked to you about the possibility for this weekly setup in development to break out to the upside. So actually, I'll go over to a raw chart just to show you this in more detail, exactly what I mean by that. So if we have a look at silver daily chart at the moment, you can see where we've got this basing formation. In fact, just yesterday, silver had a 3% pop to the upside. You can see there's some overhead resistance at the moment around $70.24. But very clearly, we have this basing formation in development. And if you have a look at the gold to silver ratio, you will see that silver is certainly more undervalued than gold right now. We favor silver over gold. And the way that we've been basing over the last week is giving rise to the potential for a breakout as we head into next week's FOMC statement. Now, the big question which we have had at the Gold and Silver Club, particularly if we go over to gold as well, is whether we will see another washout on gold prior to a potential rally and relief rally back up again. And this is a very relevant question at the moment. So this is just gold on a raw chart right now, the key levels that you want to have in mind right now. And I'll just go over and also just show this with a few more indicators so you can see exactly what we're looking at as we go into next week's FOMC statement. So if we have a look on a weekly chart, we continue on a weekly closing basis to close back above the 61.8 Fibonacci retracement level. So if you take the highs of the year, go back to the lows of 2015, you'll note where we're sitting right around that level. We continue to breach below 1170, but on a weekly closing basis, close back above it. And it does look like gold at the moment. It's trying to find its feet. It's treading water right now. It's not got the legs behind it to fully follow through at the moment. It's had a few bounces from around the 1160 zone, and on a weekly closing basis we continue to close above 1170, which is a important zone. It's the 61.8 Fibonacci retracement level, and you want to watch this very carefully as we go into next week. Now, what you could expect if we do see the interest rate hike go ahead next week is we could certainly see a short-term spike in the US dollar, which could cause a flush out again for gold and silver. But you need to bear in mind it could be short-lived. Now, one of the reasons behind this is due to the US dollar last week off the back of non-farm payrolls having a very weak reaction to that. So on strong non-farm payrolls, the US dollar sold off on Friday. In fact, we gapped on the Sunday open, but had quite a large move lower, which is this long candle coming down here. And a lot of our indicators are showing that the US dollar index right now is rolling over. It's been very overbought. And in fact, today we've just had a pop to the upside as well, following on from the ECB extending the QE program at a slower pace. And you can see the US dollar has just popped up. It's come back up to resistance. And what we'll be looking for a similar move actually as we go into next week's FOMC statement, because we are starting to roll over. We're correcting from a very overbought condition with the US dollar. A lot of the moves so far with regard to next week's FOMC statement and the potential for an interest rate hike has already been priced into the US dollar, with it breaking out to 16-year highs recently. Obviously, the Trump election results have caused a significant move on the US dollar, also the stock markets. But you can see we just come right into resistance today. And I would suggest that these moves, these retracements at the moment, could be used as selling opportunities in the short term for the US dollar and taking advantage of a potential low that will form on gold and silver as we go into mid-December and as we go into January and February as well. So our view at the moment is that the US dollar is overbought. It is currently in correction mode. And although we look at this to potentially spike off the back of the FOMC statement next year, the interest rate hike, if you go back to last year where we had a very similar scenario, and we'll go back over to gold, you want to note here where we got this knee-jerk reaction around the FOMC statement where we sold off, but on a weekly closing basis, we closed back up again above the consolidation zone, so essentially above support, going back to this time last year around 1,050 US dollars. And from that point onwards, we of course saw a significant rally over 15% over January and February. And we've got a very similar formation at the moment. You can see gold is trying to find some sort of a base. It's trying to find the bottom at the moment. It's not quite there. It doesn't have the investment demand to drive it higher right now. But you definitely want to have gold on your radar as we go into January, where you can often see a lot of additional inflows into the markets. Fund managers, banks, institutions, they will be looking to position themselves for 2017, and certainly they'll be looking at gold if it's around its current levels being quite undervalued. Now, I know for a fact there are a lot of traders who are looking to pick up a position on gold at the moment if we do dip down to around the 1140 to the 1150 zones. That's worth noting. We might get some sort of spike low here. We could certainly get another washout on gold, take out more stop losses, take out support, but we'll be watching to see how gold reacts on a weekly closing basis. If we were to see a break and a close below the 1140 zone on gold over the month of December, continuing through to January, yes, absolutely. Don't look for a buy, look for a potential continuation and a collapse essentially of gold prices. But right now, we seem to be developing this basing formation where gold is trying to hold on to support, especially on a weekly closing basis. We're closing back above the 61.8 Fibonacci retracement level. And you definitely want to be on this as we go into next week's FOMC statement. It could provide a very good trading opportunity. And as I mentioned before, really the metal which is performing the best, the precious metal, is silver right now. If you go over to the weekly chart, we've broken above last week's highs. We continue to close on a weekly closing basis above the 61.8 Fibonacci retracement level, which is significant. And you can see that level $16.50 per ounce has been used this week as an area of support for the price to trampoline off. And you can see so far this week, we've broken above last week's high, another rejection candle, found support at the lower end of this trend channel on a daily candlestick basis. You can see we've got this rounding formation here, which is a basing formation on silver, where it could get ready to pop higher as we go into next week. Again, I'll bring that over to a raw chart for you to have a look at on silver, just so you can see that more cleanly on the chart. You've very clearly got this rounding formation, and if we get a pop above $17.25, you've got quite a lot of clean air for silver to then rally higher and retrace back towards the upper end of its trend channel. Then of course we'll see where it moves from here. Now, if silver was to pull back, and if we were to see another retracement here, again, buyers right now for silver, they're looking at the following zones. They're around the 1640 down to 1620 is where we continue to see buyers come in at the moment. Follows the lower end of the trend channel. It's quite a significant zone. It's around the 61.8 Fibonacci retracement level. I'll draw that on for you just on the chart so you can have a look at those zones. So if we have a look, this is the 50% level, and let me just add to that the 61.8 as well, just so you can see that on the chart. Okay, so you can see at the moment, this is the zone where we continue to see, especially on a weekly closing basis, this is where silver continues to hold at the moment. So you can see very clearly 61.8 Fibonacci retracement level is a major zone here for the metals, particularly gold and silver, as we go into next week. Now, I have been asked a few questions about platinum, and I'll just go over to that chart just to show you what platinum has done over the last week. We got a breakout from a critical area of support last week on platinum after the non-farm payrolls. We formed a falling wedge pattern. You can see that has found support at $900 per ounce. We popped above that level on Friday's non-farm payroll. And if I take this off the chart, you will also see where we're just knocking on the door of overhead resistance at the moment around the 954 zone. So I would definitely also have platinum on your radar as we go into next week. It's been quite a significant correction on platinum following on from Brexit, this move that we've had. We had a spike just before the US election, but that has then corrected yet again. But we've got a really nice V-shaped reversal pattern in development here. And I would favor, for those of you who like to trade the FOMC statement, you're looking for opportunities, certainly look at silver and platinum. Gold, to a certain extent, if we do get a rally on the metals, will also get lifted, but I would be looking at silver and platinum at the moment. As we go into next week, you can see as well that platinum has quite a lot of clean air here to break back to around $1,000 per ounce. It's building up a really nice basing formation here. And also we'll be watching the US dollar. Can the US dollar follow through from today's move? It's formed so far. You've got a bullish engulfing candle, quite a strong rejection candle forming, but can it continue this momentum to the upside, or is it just very simply going to come into this resistance zone, get sold back into, and just continue to consolidate? So watch that, certainly again in an overbought condition on higher time frames here, but we'll be watching that very closely as we head into next week. Now, of course, for those of you who are on last week's session, you'll also be aware of the current breakout that we had on US oil, on WTI crude oil and Brent crude oil as well. So both of these markets rallied significantly following on from last week's OPEC deal. And with that, we saw over a 14% move last week on US oil. We're looking at the weekly chart at the moment, and I'll just bring you over to the daily chart as well. So the daily chart, we've had this significant breakout, which we took last week off the back of the OPEC announcement, catching a 400-point breakout on this really good technical setup as well, a pennant formation, which we discussed in the previous week's analysis too, which we saw very similar actually in terms of the breakout to what we saw in the September OPEC meeting as well, which was a 10% move over a week, 6% move in a day. And what we saw on this OPEC meeting was essentially a 10% move in one day and a 14% move within 3 days. So we had this pennant formation breakout. This was the 10% move, and then we subsequently rallied all the way back up to the 16-month highs. So that has been quite a significant move over the last week here. So what I would pay attention to at the moment on oil here is certainly we got a bit overextended at the beginning of the week, overbought. I'll bring you over to a raw chart. This chart has got quite a lot of indicators on it. So let me just bring you over to a raw chart so you can see what's going on. Okay, so we had a rally all the way back up to resistance, and you can see this was not the time to be buying oil. You've got a classic formation here, which is a bull trap. So traders who are getting in the trade too late, buying for a break above 52 US dollars a barrel, have essentially being caught out in this pop to the upside, sudden reversal. That is a bull trap. And then we've had a couple of days worth of breakdown from this point, offering a short-term sell short opportunity as well, actually, for us to take advantage of. But now,
Interrupt. We cannot hear your sound. We cannot hear your sound. Can you please check the mic?
Okay, we appear to have lost the sound, guys, temporarily. Just a quick check-in and see if this works. If you can now hear me. Yeah, okay, fantastic. Okay, we're back. Okay, good. So I will recap on a summary there as we go into next week's FOMC statement. So essentially, what we're looking at is the top trading opportunities as we go into next week. So those will include the following. I would have as the top 3 markets that you want to have on your radar next week, certainly silver. Keep a very close eye on silver. As mentioned, the gold to silver ratio favors more upside on silver as opposed to gold. If you trade gold and silver and you're looking for opportunities to trade breakouts here to the upside, you want to have silver on the radar as opposed to gold here. Silver has a potential for more upside. Its overall basing formation in development at the moment would suggest that we've got the potential for a breakout. And I would see also buyers coming back into silver on retracements back down to the 1620 to the 1640 zone at the moment. In respect to gold, I'm not ruling out a flush out here. So essentially just flushing out support around the 1160 zone, but then I would look for, on a weekly closing basis, the potential for gold, especially given the fact that we've developed these rejection candles around the 1170 zone, which again, remember, is the 61.8 Fibonacci retracement level, which we continue to close above. I'm not ruling out the potential for a flushing out of stop losses and then sudden big inflows coming in around the 1140, the 1150 zone. I know there's a lot of traders who are looking to pick up positions here on gold at lower prices. So if it comes down to 1150 zone, 1160 zone, and also 1140, remember, this is a big consolidation zone. Going back to 2014, we had several spikes to the upside when we got revisits of that level. So I would bear that in mind. What would a flush out look like? Okay. Look, for example, going back to the charts in 2014, September 2014, and this is classic of a reversal. A flush out would be where you see the market just take out stop losses. You get a big push lower, as you can see here on the weekly chart, a big push down to new lows, and then you reverse. You see buyers come back into the market. It then turns out to be a bear trap, and you see a reversal in price, which then leads to a significant rally. So that is really what you often get on gold in particular when it's trying to base out. It doesn't normally just find support around numbers and rally. It likes to flush out the stop losses. You get this waterfall moment where you see significant moves, and then it will base. You'll get sudden big moves in the market. You'll see buyers come back in, and then you'll see a reversal. So that is what I've got on the radar at the moment. The potential for gold to have another flush out lower and then reverse, and then you see positions come in the market. At this point in time, what we're seeing right now is the current pullback in corrections since the US election is not being bought back into by funds. When they buy back in, whether that is over next week's FOMC statement or as we go into January for the January effect at the beginning of the year, that is when you'll see the big moves. But whilst funds are staying out of this position, whilst they're not buying the dips, you're not going to see the rally at the moment on gold that it would need to do in order to build up momentum at this point. But I would definitely just have that on your radar. Next week's FOMC statement, and also, of course, as we go into January as well. We're significantly oversold at the moment on gold, but don't rule out the fact that it could have another flush out lower from where we are. And again, platinum, I do like the price structure developing on platinum at the moment. We got that falling wedge pattern last week, which broke out to the upside. We had a false break of support, which got bid back into, which is what we like to see. So that is essentially a bear trap, which then reversed, and we've had a decent move to the upside, building up momentum up to the 950 zone. So I'll be watching out for platinum and also oil. I won't go into a lot of detail on the agricultural markets right now, which we have a couple of positions on at the moment. I'll keep it more focused to next week's FOMC statement, but also have oil on your radar, especially on a weekly basis. You want to keep an eye on the weekly chart here. The price structure is bullish in the midterm. Short term, you can see we've had a bit of a pullback after last week's 14% move to the upside, to be expected, profit taking to get a pullback from those zones. But now I will be looking at this for the potential for the next leg higher here, and keep an eye on the weekly chart. Now, of course, at the Gold and Silver Club, we'll be trading these with all of our private members, going through the full life cycle of the trades, entry, exit, our take profit targets. If you want to find out more and you want to get access to that information as we go into next week's FOMC statement, if you want to be trading that with us, if you want to join us for the live trading rooms, and you also want to get access to the full spectrum of our services at the Gold and Silver Club, I will break that down for you very shortly, okay? So let me just go through that, in fact, before I go over to the top trades of the week. For those of you that need to shoot off, if you need to, or if you would like to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we'll get in touch with you ASAP. If I could ask, we get a lot of applications at the Gold and Silver Club on a daily basis. If you mention that you've been on today's webinar, if you're watching the recording from FX Street, we do have a special offer for those of you who are coming via FX Street. So whether you're watching the recording or you're on YouTube live right now, when you make an application, please mention in the description, in the comments, that you've been on today's session. There are special offers for those of you who are on FX Street. Okay. Yep, fantastic. So with that, let me just break it down for you in terms of the top trades over the last week. Those have included the following. So we took advantage of a sell short opportunity on Palladium. In fact, Palladium has continued to break down this week. We got it in for 260 points profit, quick 2-day trade, trading it back down to its short-term support. WTI crude oil, of course, last week we took advantage of the OPEC move and we got this spot on in terms of the exit, the entry, 400-point gain on that. Significant move, over 10% in one day, 14% over the course of 3 days. That was a beautiful trade. And also natural gas taking advantage of the breakout of its recent support where it rallied back towards the 2016 highs for 310 points profit. So again, if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, make an application to join us at the Gold and Silver Club, www.jointhegoldensilverclub.com. In terms of what that includes, who it's aimed at, well, essentially, whether you're a new trader and you just want to develop a solid understanding of the markets and fast track your results, or even if you are an experienced trader but you're just looking to take your trading to that next level, the private members live trading room is definitely for you. So as a member, you get access to our live trading room. So private members get exclusive access to our live trading rooms with our expert traders analyzing the commodity markets right in front of you, picking out highly profitable trade setups, sharing exact entry exit points, our profit targets, also our stop losses. We share the whole life cycle of the trade, as well as walk you through live trade ideas ready to implement. You get trade notifications, emails via SMS, and also emails, so you get alerted to every single new trade. Again, the full life cycle from entry to exit, profit targets, any trade management, every stage of the process you are updated on. You get our commodity research and our trading plan for the week ahead. So you get exclusive access to our proprietary trading research and market insights to help boost your win rate and ensure you're getting on the right side of every trade. And our research is there really to give you the ultimate edge in the markets and fast track your results. So again, you get the following as a member. You get exclusive weekly live trading room webinars, live trade setups ready to implement for instant results, real-time notifications via email and SMS so you're not missing out on profitable trades, exact details of where to enter, exit, place a stop loss on each trade, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the markets. Okay, so again, that's www.jointhegoldensilverclub.com. Okay, fantastic. So with that, guys, I hope that gives you some preparation as we go into next week's FOMC statement. And of course, we look forward to hear from those of you who'll be making an application to join us at the Gold and Silver Club. I wish you all the best, good trading, and of course, we will speak to you very soon. Okay, guys, take care. Many thanks. Bye-bye.